سيداتي سادتي، مباشرة إلى الجلسة الرابعة والأخيرة من جدول أعمال اليوم الأول من الندوة، ومحورها حول تطور إعادة التأمين السعودي. يشارك فيها الأستاذ سيد جفري، شريك في أوليفر وايمن بالشرق الأوسط، أيضا الأستاذ محمد علي، نائب الرئيس محلل أول في شركة مودز انفيزيتور للخدمات بالشرق الأوسط، الأستاذ مؤمن مختار، الأمين العام للاتحاد الآفرو آسيوي لشركات التأمين وإعادة التأمين، الأستاذ محمد المرهون، العضو المنتدب في شركة هايون لإعادة التأمين. يدير الجلسة الأستاذ أحمد القريشي، رئيس إدارة الاكتتاب في شركة إعادة السعودية. أستاذ أحمد، الحديث إليك الآن.
السلام عليكم، مساء الخير للجميع. آخر جلسة إن شاء الله تكون خفيفة قبل فترة الغداء. في البداية إن شاء الله حنقدم فقط عرض توضيحي، يعني ما يأخذ أكثر من 5 دقائق، لكن إن شاء الله الهدف منه نعطي تصور عن محاور النقاش. لضيوفنا 2 من ضيوفنا غير متحدثين بالعربي، فحلقة النقاش حتكون للأسف باللغة الإنجليزية. Therefore, we will switch to speak in English because our guest is non-Arab speakers. So we'll start with the presentation, then we'll introduce our guests here today. So if you see the slides, it's showing the gross return premium and the net return premium and the ceded premium for Saudi market for over the last more than 10 years. Now, if you see the increase or the growth from year to year for the recent years for the reinsurance business is much higher than the gross return premium, which is highlight the need of reinsurance for our business. So I'm not going to highlight further about this point, but it will be one of our key points for our discussion with the panelists. The second slide, we're just briefing here just to give an update about the Saudi market. So there is one specialized reinsurance company. There are 5 insurance. Also, they have reinsurance license where they accept what they call inward FAC or FAC business. And we have also, I didn't see the numbers, but it's about 9 reinsurance brokers specialized in reinsurance business. Now, if you see the cession ratio for reinsurance business in Saudi Arabia for what they call it for non-mandatory business, which is energy, aviation, property, liability, all these, it is driven by reinsurance business. So the role of reinsurance business is key to drive these line of business. And then also if you see the left side and the right side, now the key side and the right side, you will see the distribution of line of business from the gross perspective. So you will see it dominated by 2 line of business, which is motor and medical, versus the reinsurance, which is dominated by property and casualty line of business, which is the nature of the business here in Saudi Arabia. It is reinsurance market driven rather than driven by local markets. Then this to give you just a journey of reinsurance over the years for Saudi Arabia. So 2003 is the regulation is issued. Then 2004, the implementing regulation, which has highlighted the 30% cession into the local market. Also, they mandated the broker role to offer the business initially to the local market. Then it took years. Then in 2008, the first reinsurance company established. Then 2010, the regulation of reinsurance, which is a regulation more specific about the rule and how the governance of reinsurance business in Saudi Arabia. Then recently, which is a key what they call it, role of the reinsurance market is the IDI product, which the reinsurance market has played a key role of this product, which is one of the products that will derive the industry going forward. And recently, last year, the regulator, central bank issued a regulation regarding the local cession, regarding the treaty book of business, and they mandated the kind of phases of implementation of treaty business, how it should be ceded initially to the local business. Then lastly, this is just one of the few points we would like to discuss with our panelists, so we'll try to touch on these points through our discussion. And also these other points we'll try to discuss with our panelists. Because of the time, I'll try to just skip these very quickly. Then the last thing is I would like to introduce our panelists regarding so we can start the discussion. So we'll start first with Mr. Syed Jeffrey. So Syed Jeffrey is a partner in Oliver Wyman Insurance Practices, starting out of their London offices and now based in the Middle East. Here is in the region, Syed advised the regional insurer, regulator on the topic including strategy, design, and digital transformation. Then Mr. Muhammad Ali is from Moody's. So Muhammad is the Vice President, Senior Analyst within Moody Insurance Group based in Dubai. He's responsible for Moody's insurance rating in the Middle East. Then my best friend, Mr. Momin Mukhtar Abu Ahmed, he's the 7th Secretary of General at FAIR. His experience in the industry over more than 35, mainly in Saudi Arabia and also outside Saudi Arabia in Egypt mainly. So, and then our last guest is Mohammed Al Marhoun, also our colleagues or ex-colleagues. Mohammed is Managing Director of Ion Reinsurance Solutions, Saudi Arabia. He currently also here presenting as a Goodwill Ambassador for the Charter Insurance Institute, where he plays a key role in assisting the CI within the region. So I will start a discussion with our panelists. So to kick off with a discussion with Syed, is the role, what would be the role, or how do you see the role of reinsurance in the economy?
Is this working?
Yes.
Oh, excellent. So thank you so much for having us, Ahmed. In terms of the role of reinsurance in the economy, there are different aspects to it. I'll start with the broader economy and the role of reinsurance in the broader economy. The core role is, at the end of the day, protection and giving businesses that safety net for them to grow, to expand, to venture into new areas, but also inculcating this risk-adequate behavior as well. So making sure that businesses understand the risks that they face and adopt behaviors to mitigate, protect themselves against those risks. That's the direct protection element. Is it? Is it better now?
Yes, yes.
Excellent. So that was the general protection element of reinsurance. Now, specifically on local reinsurance and having local reinsurance capacity, it goes beyond that protection element to, there are a number of benefits of having local reinsurance capacity. So that includes primarily retaining premium flows in the kingdom, which is critical to make sure that some of those premium flows are reinvested into local capital markets. It's the buildup of specialized talent in the country, whether that's direct in the insurance value chain or in adjacent areas. And it also has an element of stability, which is in case there's the global reinsurance capacity is either withdrawn or pricing is adverse, making sure you have that local reinsurance strength as well. So I think those are the general benefits of having reinsurance and specifically local reinsurance. That obviously goes beyond the core role of reinsurance, which is helping primary insurers write business more efficiently and protecting them from the risk of ruin.
Yeah, thank you, Syed. Now, if you we can elaborate on this, Mohammed, regarding the role of reinsurance also. I have read the recent report that published by Moody's regarding the reinsurance outlook. So how we can elaborate regarding what's the role of reinsurance for the market, for the industry or the economy, and also can you give us a brief about the recent report that has been published by Moody's regarding the outlook of reinsurance?
Thank you. First of all, thank you for having me here. It's a pleasure to be here. In terms of the role that the local reinsurers plays, I think Syed covered it spot on. But also from a credit perspective, what we see is it helps develop new product lines and it helps manage those risks for the market. An example of that is actually what Ahmed, you did at your team,
Yes.
with your team in Saudi Re for IDI, for inherent defects.
Yes.
So that is something that was new, that's developing in the Saudi market. What we like to see is that the reinsurers play a role, the local reinsurer in tandem with the global market, to be able to manage that risk for the market. And with this, of course, we then see that there are more avenues of products that come in, and it helps the market to overall manage the risk. In terms of what you were talking about, global reinsurance outlook, well, despite what we've seen in the catastrophe markets, catastrophe is rising, and despite COVID and all of that, our outlook actually for the global reinsurance market is stable. And what's basically underpinning that is, on the first side, is that profit margins on reinsurers have improved. That's helped by improvements in pricing, as well as improvements in their investment income through interest yields. So that's helping them override the storms that have come in. Just to give you a sort of insight into this, if we exclude COVID-19 impact and the impact from the major storms that we've had, the profitability of 2021 for global reinsurers was the highest we've seen in the past 8 years. And that's because of pricing corrections that have happened and improvements in pricing on the reinsurance side. So that's what's underpinning our sort of outlook. What's also helping is, of course, their capital and balance sheet strength. So in terms of balance sheet, what we find is that with interest rate rising and very stable investment portfolios, which usually reinsurers have, that reinforces the strong regulatory solvency that they already have. So the balance sheet capitalization is actually improving and has sustained through the losses that we've seen through catastrophe. There are certain headwinds. Now, what is changing is because of ESG, because of the catastrophe losses increasing, insurers are changing their models, they're changing their portfolios, and that can, in tandem with claims inflation, with the rise of catastrophe, bring some volatility to the earnings of these reinsurers. So that's on the downside. And sticking with inflation, we see that as the key risk for reinsurers, because currently what we're seeing is inflation is impacting short-term lines such as motor and property. However, if this increase in claims inflation continues, it will start to go on and start affecting the profitability and inflation in longer tails lines such as casualty. So these are sort of the risks that we see. If we come to more of the local market that we see over here, again, we're seeing similar movements because they generally move in tandem with global reinsurers. Now, one good thing is that we're sort of protected from NatCat events in this area. However, we've still seen a rise in the frequency of some storm activity. And it's very important, and we are seeing local reinsurers, regional reinsurers, upgrade their capability for pricing, modeling of CAT. So that's very important, and governance and risk management that we see at these reinsurers. Thanks.
Thank you. Thank you, Mohammed. Now, if you move to Abu Ahmed, given your experience in the local market, have you served in the insurance industry from different angles, insurance and reinsurance, and also now you are working as a Secretary General at FAIR. So can you please, given your experience and knowledge in this, what they call it, in insurance, can you give us your thought about the role of local reinsurance to support the market? What's the key role or how we see the role of local reinsurer to support the insurance industry?
Shukran, Abu Sulaiman. Thank you for having me here. I apologize for all the audience here because we are actually close to the lunch time, so perhaps this is not the right time. But anyhow, the reinsurance is exactly like the insurance. So, I know that many of the audience here know reinsurance and insurance better than me, but the insurance is there to protect us as individuals and corporates. In the meantime, the reinsurance is there to protect the insurance companies. So if the fundamentals are not right, for example, if my car is expensive, if I'm driving in a very reckless manner, then certainly the insurance company will charge me higher premium. The same is the case with the reinsurance company. For them to buy a good protection, to protect the insurance companies, they have to pay to a second reinsurance market called retrocession market to buy the protection. The good thing about having a local reinsurance company is actually to protect the insurance companies here in the market when the capacity is rare and when the capacity or reinsurance capacity is very expensive. There are times when the insurance companies will find the capacity abroad very expensive and perhaps not there. And it has been proven several times, particularly, for example, during the war when Iraq invaded Kuwait back in the late 80s. Actually, there was one syndicate that has provided the insurance to the against war when the international market has abstained from providing this capacity. The reinsurance, nevertheless, the reinsurance has to have also its core business right, particularly the capacity, the response time. Therefore, if I'm a reinsurer, a local reinsurer, and an insurance company sends me a risk to place or to protect, and I don't have the capacity, then I will find someone else, and I'll go to the international markets to find the protection. If it is expensive here, then I'll find some other market. But more important, if the response from the local market is slow or they do not have the capacity, then the insurance companies will suffer. And I have to repeat that the insurance companies in the market will suffer a lot, particularly in the next coming few years, because the international insurance is facing major challenges, particularly as my colleagues here mentioned, the inflation is now rapidly escalating, and it will put a lot of pressure on the insurance companies in terms of the claims costs, in terms of finding the right calibers at the right salaries or whatever. And at the same time, we are used to go through soft cycles in the insurance market and reinsurance market, where many of the insurance companies started to provide covers that will put them in trouble if they have not reviewed it carefully in the short term. I talk about particularly the business interruption. There are companies that are providing the business interruption at very minimal cost in addition to the property damage. And with the business interruption, with the supply chain disruptions, with the inflation, some of the business interruption covers will cost insurance companies tens or perhaps hundreds of millions of claims. They are not ready for it because they have not seen that before. They have not seen the claims coming. Therefore, I always encourage for the insurance companies to go first to the local reinsurers because they understand the risk, they understand the culture, they have the same language, they have the same time zone, they have the same, understanding of the type of risks they are insuring. And definitely the international also capacity, I should not ignore the international capacity, which brings also the know-how here. The insurance industry is still young in Saudi Arabia and in many parts of our region, and it takes years until it reaches the very sophisticated stage. So we need always the capacity to come with the transfer of know-how, not only the capacity. Thank you.
Thank you, Ahmed. Shukran. Now, if you move to the other dimension of the reinsurance industry, which is the brokerage, Mohammed. Now, recently, the central bank, they changed the role of the licensing of reinsurance insurance broker, where it splitted their insurance license for the brokerage versus the insurance direct business. Now, how do you see the role of reinsurance brokerage in the local market, and how, mainly for large risk, where the role of the local broker is key, and how do you see the knowledge transfer has been brought from the international market to the local market? So as the reinsurance brokerage industry, we have what they call the expertise, the knowledge, so we can what they call support the reinsurance industry and the insurance industry locally?
Thank you, Ahmed. It's a very good question, an excellent question, coming from an actuary. Actually, I'm seeing the role of brokers is beyond just placing risk. It goes from developing the best reinsurance structure for the client's portfolio using quantitative methods like the dynamic financial analysis. And it goes as well to the extent to structure or design a reinsurance program to cover the big risks which need specific capacities. So the role of brokers, not just placement, it's widespread. The decision of SAMA to segregate the activities of brokers from retail and reinsurance is an excellent decision, and it's really a big milestone for the industry in terms of shifting the overall dynamics. By that I mean, because of this decision, reinsurance brokers have to invest in the Saudi economy. And for example, if we take our case, now we are developing local talent and trying to get the know-how to the kingdom. As you know, specifically, reinsurance talent is very rare, not just in the Saudi market, it's also within the Middle East. And for example, it's very difficult to find a treaty underwriter or broker, and also it's very difficult to find an expert in specialty lines, especially in the energy, for brokers or reinsurers. So for us, our role is to bring that knowledge from outside to the kingdom, and we already started hiring fresh graduates, and we're training them, whether it's in Lloyd's and other global offices. Another thing that is important for the brokers, especially the international brokers, is to transfer the best practices from all over the world to the Saudi market. For example, for us, we are in about 120 countries, and being united, we have access to that knowledge, and we are trying to bring it to the Saudi market as well. Finally, for me, the brokers give solutions for their clients, whether it's risk transfer, or claim management, or capital management. I think the ultimate goal for us as reinsurance brokers in Saudi is to develop the talent. The talent pool is very short, and because of this decision, now we have a more focused approach to hire reinsurance professionals, and hopefully in the short or long term, we will start exporting young Saudis outside to service the reinsurance market.
Thank you, Mohammed. Thank you, Mohammed. Come back to you, Sayed, regarding the role of local reinsurance industry. Now, given the globalization now, and what they call different countries that may have different what they call objectives to protect their economy. Now, how do you see the role of having a strong local reinsurance industry to protect the whole economy, rather than relying on what they call international market to provide that support?
I think that's a good question. I think we briefly touched on this, Momin touched
Yes.
on this, and Mohammed touched on this as well. It's important to have local capacity, definitely, as we were mentioning in terms of stability, as you said, also to retain premiums within the kingdom, so that they're invested in local capital markets. But I think one thing to touch on is, what should local reinsurance capacity look like? And I think that's one area where, and I know with Saudi Re being the leader there, there's an important element of scale. You don't want a Saudi reinsurer which is too exposed to the domestic market, which lacks scale. So you want a local reinsurer which in itself, so it is local in how it's defined, but its portfolio is regional and ideally global. It has a diversified portfolio. It has a comprehensive offering. So that's important for a local reinsurer. And I can't emphasize enough the importance of scale in reinsurance. So and that's very important for a player like Saudi Re, a local reinsurer. And I think that's something we can discuss as a group as well. So it's primarily to make sure that the local reinsurer itself is stable It has a well-diversified portfolio. It can bring a comprehensive offering. And importantly, there's a lot to learn from global reinsurers. And that's because I think capacity provision is just one part of reinsurance.
Yes.
There's a whole lot that goes beyond capacity provision, which local reinsurers need to pick up and from some of the global reinsurers. So especially in a market like Saudi Arabia and where we are in the life cycle of insurance, the primary insurers need a lot of help beyond capital. So whether that's basically your value-added services, your risk, your research, help on pricing tools, there's a long list of items that go beyond just capacity that they would need from a strong local reinsurer. And which is why I go back to the point that you need to have that local reinsurance capacity, you need to have a player which has scale, a player which can invest in these capabilities and which can bring these capabilities to the local market as well.
Yes, thank you. Thank you, Saeed. Now, to elaborate further, Abu Ahmed, regarding the local market. Now, if we see from the presentation, one of the slides we have presented, the percentage of the business that's seeded outside the kingdom. Now, if you see aviation, for example, energy, property, all these business has been seeded outside the kingdom. So what kind of action as an industry or regulator or companies can take to maintain that premium within the kingdom? And also what would be the role of reinsurance industry in this part?
Okay. Abu Sulaiman, you're asking a difficult question because aviation and energy, I mean, by default, these are very, very peak risks. For example, I understand, and I actually started my career in the aviation department back in Egypt. So, I mean, you talk about a limit of liability of $2 billion any one accident, right? That's only, so I mean, not a single or even a pool of insurance companies will be able to take that. But the other point is that the aviation itself, there is not, there are no, I mean, in one country, you will not find many fleets to have the portfolio or a pool so that if a loss happens, you will be able to compensate that from different sources. Perhaps the case is not so much the same with the energy, but in aviation, this is the traditional nature of the aviation portfolio that heavily seeded outside the country so that if something happens, the country is not heavily affected. With regard to the energy, this is a country that is, alhamdulillah, blessed with the energy and oil. So there are also chance or opportunity to return here more, but at the same time, you don't have also the diversity. You have the severity of the losses and severity of the risks. You have peak risks. You have like marine energy and non-marine energy, downstream, upstream, middle stream. Now to talk about. So first of all, you will have to have very rich and very expensive expertise. Secondly, you will have limited resources to retain more in this field. But what I would, if you allow me to divert a little bit, then aviation and energy. Nevertheless, there is a good chance for the insurance market here to retain more. And I really encourage the insurance companies here to retain more and to cede more to the local reinsurer, not because I'm biased and I have been working for Saudi Re for 4 years. It was an honor. But the simple reason is that if it is a good business, then the country is keeping the money in the country. So that rather than the premium is exported outside, the premium stays here. But we have to keep in mind that we don't overload the risks that are accumulated in the reinsurance company so that, God forbid, if something wrong happens, the insurance company and the reinsurance company both will collapse. So I encourage that we retain more and cede locally more. But to do that, we have to make sure that when we retain more, we retain also more of the profits. We don't retain more of the risks and then end up with losses. At the same time, if we are ceding more to the local reinsurer and the rates are very, very thin rates, the risks are not well managed, then also the reinsurance company will decline the risk. then the insurance company has to go to the international world or international reinsurance market to place the business, and they will find a lot of difficulty to place it. And this will not appear in the P&L balance or the profit and loss account of the company, but it will appear in the accumulated losses or exposure. The company, if they are running exposure reports, they will see that I have written twice the exposure that I have written last year, but at only 20%, of course, of the premium. Then actually I'm putting a lot of pressure on the company. I'm getting it closer to the verge of collapse without knowing. So I will encourage the insurance companies to review again the underwriting guidelines, the quality of the risk, the pricing. The pricing shouldn't be prohibitive, so it shouldn't be very expensive, but it shouldn't be competitive at any, just to get the business at any price. The company will pay the cost very shortly if they do that.
شكرا أبو أحمد. To elaborate further, Mohammed, regarding the role of our retaining the business within Saudi market. Now, one of the criticism for the brokerage or the broker is for the mega risk or large risk. This has been discussion over years regarding the same issue. The business is what they called, has been what they called written or placed overseas, and then the local market is just issuing the paper for placing the risk. Now, how we ensure all what they call underwriting process, mainly for mega project, all parties involved in this regard, rather than relying on the international market to do that without what they call having the knowledge transfer to the Saudi market?
Thank you, Ahmed. It's a very interesting question, especially for us brokers. We just need to understand that multinational companies with mega risks, they have a list of stakeholders, and those stakeholders have a list of requirements. And one of those requirements is they would like to meet the ultimate risk taker, because they believe if they do so, they will have the best coverage and the best price. And this is what we're trying to avoid as a market. I think to be able to do that is we need to have the right infrastructure in the Saudi market. By that I mean the right investment in human capital and the tools, whether it's pricing tool and the risk engineering capabilities, because the role of insurance company is not just transfer of risk, it's also to improve the risk quality. And as well, insurance companies need to be well capitalized to take part of that volatility of those energy risks when they're really huge. Yeah? Reinsurers are willing to give capacities, but as long as local market is willing to retain that risk, and that will put a lot of pressure on the balance sheet as well. So they need to be well capitalized. And if you go on with the local market, you see a lot of scarcity about energy underwriters. That's why the original insured need to be well educated that the local market has enough talent and capacity to start riding those big risks. So it's not just for us the role of the brokers, because we as reinsurance brokers, we are in the other end of the chain. So we provide the best terms and conditions and coverage to the cedent, and the cedent will pass it to the client. So this is where our role stops. The other part is, I think it should be initiated by the insurance companies and by having the proper infrastructure to develop talents in the market.
Thank you, Mohammed. I will shift the discussion slightly from the local reinsurance market now to the rating. Now, Mohammed, we know the IFRS 17 now is a hot topic for the insurance industry. So I would like you to highlight or address two parts. Would there be any change on the rating assessment, considering the change on the accounting standard? And the other comment I would like you to elaborate further. Now, with the new standard, what they call the rating of the reinsurance security, the insurance companies keeping or exposing themselves will be one of the key what they called criteria for assessing the liability for an insurance company. So how do you see the impact of IFRS 17 from these two angles?
Sure. Thank you. That's a very hot topic and very important question. Now, first things first, IFRS 17, purpose of it is supposed to be to bring transparency and comparability. Transparency in terms of reporting, comparability in terms of the performance of the companies. But from a credit perspective, from a credit rating perspective, actually, we've always looked at the underlying economic value of that company or the economic credit standing of the company. Because this is a reporting change, as such, we don't expect our credit ratings to change because the underlying economics of the company are supposed to be the same. So from a credit perspective, from the get-go, we're not expecting IFRS 17 to have any impact on our rating levels. However, having said that, because IFRS 17 does change how and when results get reported, what it could do is make boards, make governance of companies or companies themselves change their strategy. It might get them to change their strategy in terms of the business mix that they're writing, in terms of the investments they have. That could have an impact on ratings. But that, again, is something that is, again, we're looking at the underlying economics of that company. It is changing, strategy is changing, and that for us is where the change possibly comes. Now, this is sort of an overall view. From a more sort of short-term view, what happens with IFRS 17 is it's supposed to be comparable, it's supposed to be transparent, but because there's a lot of optionality in it, what it does do is that it may skew the results for the first few years and actually not help comparability. And that's why we've always tried to look at certain metrics that we have that sort of adjust for any sort of ups and downs that may be there. One aspect which is very important for this region in terms of IFRS 17 is, and I think maybe you were referring to that, is the risk margin. And this region already is or has been evolving in terms of the actuarial sophistication and involvement. And as a result, we have been seeing reserves becoming more sophisticated, having more buffers in them, helping the pricing adequacy as well in many cases. However, with the risk margin calculation, we do expect a hit on reserving. That could have a hit even on capital. However, again, as a credit rating agency, what we try and do is our ratings are supposed to be forward-looking. So we're trying to look through the credit cycle. We're trying to look through certain years into the future. Even if we see these sort of short-term volatilities, our ratings are supposed to be at least 2 to 3 years. The rating level is supposed to be at least 2 to 3 years ahead. That's what our opinion is about. You talked about the importance of rating and how now that will impact IFRS 17. Well, for us, that's always been the case. Because when we look at ratings, it's very important because whether that's on the investment side, whether that is on the reinsurance side, whether that is other credit, counterparty credit risks that are there. So for us, it's always been important. The fact that IFRS 17 will not take it into account for us is actually good because that will, again, force more insurers to become more proactive. And we've already seen this. So many insurers have already implemented, as part of that transition into IFRS 17, they've implemented IFRS 9. We've seen a big shift in receivables and collections of receivables. So definitely ratings is going to get impacted from that side, but I think there has been a lot of good governance work at companies that has been done around that.
Thank you, Mohammed. Thank you, Mohammed. Now, if you move also to another subject, which might not be a hot topic for the Saudi market, Sayed, regarding the ESG standard. Now, we have seen some international players, they came up with their, what they call risk appetite in respect of ESG. Now, that will cause a kind of limitation of the available capacity from the international market if the local market is not in line with these standard or requirement. So how do you see the impact of ESG, they call it in our local market, and how that could be mitigated?
It's a good question. And as you said, it's not a hot topic, but it will become a very hot topic, figuratively and literally, very soon. So two parts to it. One is what you mentioned about some of the global reinsurers, which might withdraw capacity from hydrocarbon-intensive parts. Now, That is one part of it, and obviously the implications of that is there's less capital available to some of the local players, and it might have an impact on pricing. I think that goes back to our discussion on having local capacity to cover. But I think that's only one part of it, and it might be a simplistic part of it, which is if capacity is withdrawn, you need local capacity to cover it. But I think there's something more fundamental as well, which is insurers and reinsurers in the region need to start thinking about their strategy for tackling some of these ESG risks. Now, whether and that's where local insurers and reinsurers can learn a lot from some of the global players. And what do I mean by that? That's either developing products which help businesses and insurers deal with climate risk, which helps businesses transition to making the green transition. And what do I mean by this? It's coming up with new products which help businesses locally. Because see, Saudi Arabia itself the kingdom will have its net zero ambitions as well. And I think the capacity question simplifies it a lot. I think beyond that capacity question, there's the need to develop our own strategy within the region as well. So it's how to help businesses make that green transition, how to help them better understand the climate risks that they face, and how to help and how to develop products which specifically tackle some of the climate risks that these businesses will face. That's a lot of thinking is required there from a local perspective as well.
Yeah, thank you, Saeed. Now, to add to this, Mohammed, my understanding recently Moody's have considered the ESG as part of their rating, what they call criteria. Can you elaborate what's the change in the Moody's rating process, how that is factored on the financial rating?
Sure. I'll talk about Moody's and how we do ESG in a sec, but I just want to add to because what Syed said was very important in terms of ESG. The way we see ESG for this region, yes, there are a lot of dynamics, but specifically so for the biggest risk we see, is, as Syed has been alluding to, is basically carbon transition. And in terms of carbon transition, the good news is that in the short term, it's good for the region's insurers. In the long term, there are risks. Short term, it's good because with the additional economic diversification that's being funded by the high oil prices that currently exist, and the projects that governments have in place for net zero, all of that means there's going to be accelerated public spending, there's going to be accelerated infrastructure, there's going to be accelerated private activity. All of that is very beneficial for the insurance sector in this region. In the long-term side, it is a risk because majority of the insurers in this region are single jurisdiction, focused on single countries, and what that means is that their revenues are heavily linked to the economies over here which are hydrocarbon intensive. And any shortfall by any of the governments to meet its targets in terms of carbon transition could have a significant impact on the insurers in this region. So that's on the risk. Now, you asked about ESG and how we assess it. Well, it might come as a surprise to those people who haven't been rated by us, but ESG has always been an assessment that we do. But it's been part of the ratings that we assign. And this is not just for the insurance financial strength ratings that we assign, but all our ratings globally. Because our credit ratings are supposed to be holistic and take into account all the risks that a company could be exposed to, we always used to take into account impacts from whether it's environment and how that could impact a business profile, let's say of an insurer, or whether that's social, again, impacting the business profile of an insurer, or whether that's governance, which would impact all the credit aspects of the insurer, because a strong governance and a strong governance mechanism overrides many of the risks that are there. So this is an assessment that we're always doing. So our ratings that we assign always had ESG in it. What we're doing different now is we're just taking the aspect of ESG, and that's what we've done for Saudi Re. We've just published We're taking it and showing it separately as something called a credit impact score. And what these credit impact scores are is basically our disclosure or transparency around how the credit rating that exists already is impacted by ESG risks. So whether that's impacting the credit rating that's there, the IFSR that is there, negatively, positively, if it's negative, how negative it is. So those are the sort of scores that we're assigning right now, credit impact scores. Again, to reiterate, it's always been part of the rating that we assign. We're just extracting it and showing it separately because of the demand from stakeholders. One thing, just to make it relevant for the region that we're doing, or what we're seeing is as we're assigning ratings, these credit impact scores in this region, what we're finding is, as I just mentioned, the main environmental risk is carbon transition and physical climate to a smaller extent, Physical climate risk, again, it's not a NatCat region, but storms are increasing. There are concerns around that. When it comes to social risks, what we're concerned about over here is two things. One is customer relations. Again, over here, regulators are becoming strong and more focused on ensuring that customers are catered for, there is no mis-selling. All of that exposes insurers to customer relation risks. And we're seeing certain societal trends with the governments over here are focusing on shifting the burden of insurance or coverage from themselves to the market. And what that means is we're seeing expansion of medical and encouragement of life insurance. And with that comes a lot of risks that are there, whether that's expansion of cover or whether that's just handling client data. However, and this is where G comes in, what we're seeing is because of the regulatory changes that have been happening, and especially in our rated portfolio, which is some of the highest rated companies in the region, the governance levels are quite strong. And good governance, whether that's risk management, whether that is their credibility in terms of the management, whether that is their board structures, whether it's their compliance and accounting policies. Because we're seeing these as strong, governance is actually able to override some of the environmental and social issues that we see in this region. So in a nutshell, ESG in this region, yes, it is a concern, but we are seeing companies rising above and being able to override those concerns.
Thank you. Thank you, Mohammed, and regarding for your elaboration at this point. Now, I'm taking some of the audience questions. So this is a question for you from the audience of Abu Ahmed specifically. So they are saying the same point we discussed. They think still the BNC retention for several years has not changed. Okay. So the BNC line of business or sector, the retention level within the market or by co-insurance market still haven't changed over the years. Now, the question whether that is there is no what they call the willingness from the market to build expertise or the current practice of high commission preventing that from retaining the risk and building the expertise.
Thank you, Ahmed. And thank also for the participant who sent this question, because it's really, it hits the nail, hits the right spot. We see that most of the retentions here are on the motor and medical because of the frequency. And, if something goes wrong, it can go wrong with a small margin, particularly if it is an individual motor or an individual or family medical. But when it goes to the property and casualty, the mega risks, most of the companies prefer to send it to the reinsurers, whether local or international reinsurers, and return little for two main reasons, in my opinion. First, many of the underwriters just don't have enough information to understand the risk properly, to take to be courageous enough to take the maximum retention they can. So they prefer to take a small portion and place the rest in the reinsurance market. But secondly, which plays a major role, is that the companies are able and still able to get reinsurance commission higher than the commission paid to the local market. So actually, it becomes in the best interest of the insurance companies to send the premium abroad and take the commission. For example, if the commission is higher than the commission incurred locally by 10%, then I'm very well off. And no matter how big is the loss, still the commission will cover a good part of the retained loss. This doesn't help the company to grow. The company will always be dependent on the international market. And I mean international, I mean the reinsurance market, whether local or international. So it is important that the insurance companies increase gradually their retention. They will keep more of the business in the country. They will be able to retain profits. And from those retained profits, they can increase the capital and enhance the provisions so that the company can stand in front of the big hits when they come. And also, it will enhance the understanding and knowledge and building of the expertise within the company. The alternative will be to continue to place the business in the reinsurance market. And sorry to say that, the reinsurance market will be the one dictating the terms. So we will receive the terms, the prices from the reinsurers, and whether we like it or not, we have to take the whatever offered by the reinsurance market, because we are not willing to take extra additional risk. So I will encourage. I cannot, of course, I cannot change the commissions offered to the insurance companies, but always try to make sure that we understand the risk. And if we understand the risk, we like it, and we think that our company is able to take that risk, and we have the capacity, we have the reinsurance protection, and we have spent half a day reviewing the proposal and trying to understand the risk. And then ultimately we retain 1%. I mean, for me, it doesn't, make big sense, because we are wasting a lot of resources and retaining nothing, and ultimately we have no control at all. If you allow me, Ahmed, to divert a bit from here, we all now the inflation will eat a lot of the premium by the collected by the insurance companies. So there will be, everything will be under pressure. The profitability will be under pressure. The commissions, local commissions will be under pressure. Even the International Reinsurance Commission will be under pressure. What can we do about it if the people and the companies have lesser money to spend on insurance now because of the inflation? Because inflation doesn't hit only the insurance. It hits the whole economy. So actually, there will be people will not be able anymore to buy insurance, because like the life necessities are exhausting a lot of the income. So actually, the insurance companies perhaps need to rethink again and to work again on the risk management. Risk management is something that we try to help our seeding companies or our clients, trying to make sure that the likelihood of a fire to break out in their factory is lesser. And if it happens and a fire breaks out, still the magnitude will be lesser than if nothing has been done, like the sprinkling system, the fire alarm, emergency exit, the training of the response team in the corporates, what to do during if a fire breaks out. All these things will cost little, but it will improve dramatically the loss ratios. So thank you, Ahmed.
Shukran, Abu Ahmed.
Sorry. One thing to add there is for individual insurers to make that jump from passing on a lot of the risks to retaining a lot of it, obviously it requires capital and capability development. The halfway house for that, and those are some of the discussions that are happening now as well, is whether the industry can come together to pool its capacity and to pool its expertise, to form pools, basically for specific risks. And we see that with IDI. Yes. But the idea is, even if individual players cannot go all the way for retention, at least coming together as a sector to form pools for specific risk types to increase that retention as well.
Yes, you're right, Sayyid, because an idea is one of the example, and hopefully when you see new products where the market is sharing the same or pooling the risk. Now, Mohammed, if you want to move a little bit, one of the questions that asked by the audience, what's the role of brokerage or broker in respect of technology or investing in technology? Do you invest in technology? How do you see technology impacting your business? This is the question from the audience.
Okay, if I understand correctly, what's the value of the brokers when it comes to technology?
Do you invest in technology? How do you see technology impacting your business? Do you benefit from technology? This is the question I got.
To be honest, in the region, especially for reinsurance, it's not as easy as it is in the retail, because we, as a company, are trying to shift our resources to using automation. The problem is two sides. One side is the reinsurers, they want to use the typical platform, which is emails. We're trying to use all platforms for the placement, which they don't agree on. And also the cedents, they are not willing to use the platform. They just want to use the emails because for them it's easy. So I think for insurance automation in this region will take some time. Like, for example, our colleagues in Europe, they're already using this automation system in reinsurance, and it's really making the placement easier, and you can collect a lot of data and know the direction of reinsurers. But I think as a reinsurance broker, it's very early in the region because the traditional reinsurance is still dominating.
Thank you, Mohammed. Maybe this is the last question I will take now. Mohammed, regarding IFRS 17, one of the questions they said, IFRS 17 had shaken the market and has exposed the capability of capabilities and the skills within the market and the insurance company. Does or will the lack of capabilities indirectly affect the credit rating of insurance companies?
Sure, thanks. So for us, yes, IFRS 17 transition is a concern. And the capabilities to be able to monitor that, whether that's the systems or the skill set, that is a concern. But we have seen very capable consultants, we're not consultants, we're a credit rating agency, but we've seen very capable consultants in this field that are assisting the companies, and the regulators are also giving some leeways in certain jurisdictions. So I'm not talking about the Saudi market. There are certain neighboring markets where we're seeing, because now the regulator is seeing that the companies in the market haven't come up to standard of IFRS 17, the parallel runs that have been done, there is shortages, the regulator is giving some leeway, the local regulator. Again, from a credit perspective, for us, yes, skill set and capability in this market has been a concern before, but it's actually improved a lot. And with the use of consultants, external consultants, we're seeing that they're able to overcome, governance has improved. So not as big a concern as it would have been maybe 10 years ago.
Thank you. Thank you, Mohammed. Mohammed, you want to say something finally? Because I've tried to close the session, but I... Yes. No, it doesn't work.
No, it's not.
No. Yes, it's
okay. I'm sorry. Last thing I would like to say here. One of the previous sessions, we're talking about the companies that need to diversify and not to use or to live on one line of business. I tend to agree on that. But I'm personally hesitant to see that each insurance company is writing all lines of business. It is really, really difficult for each insurance company, no matter how big or small the company, to write property, engineering, marine hull, marine cargo, energy, casualty, motor, medical. It doesn't work like that, because you need to bring expertise for each line of business. And to bring the right expertise, it is a big cost for the company. And then ultimately, you will bring the expertise, will write energy business, will retain 1% and reinsure 99% or something like that. I would personally suggest or recommend or would love to see that the companies focus on 3, 4, maximum 5 lines of business. The lines of business we can deliver the best service to the market. Because this is a service industry. But rather than we compete on risks, I have seen that small company was competing in a huge risk, and they have retained 0.5% and placed the rest of the business in the reinsurance market. Then where is the interest for this company to make sure that the risk stays in a good shape? The second part, I would like also, a message to the regulator. There is 1 minute, Ahmed, if allow me, that the regulator here in Saudi Arabia, I have lived the evolvement of the regulation in Saudi Arabia. I'm very proud of where we are now. The regulator have done a great job on the Saudi market, something we are all should be proud of. I would like also to make sure, or to ask them, if you want this market to continue to grow, that you try to enforce also the local sessions and the retention of the risks, and give particularly the local reinsurance market, whether Saudi Re or anyone else locally, the first right of refusal. So that, again, the business is written here, the client is Saudi, the insurance company is Saudi Arabian. Why the business goes outside? Give at least the local reinsurance company the chance to see that. This will help the whole country, the whole industry. Thank you.
Thank you, Ahmed. So this will conclude the discussion and the panel. So I would thank all our guests today, and thank you for your attention given the last time of the day. Thank you.
أستاذ أحمد القريشي رئيس إدارة الاكتتاب بشركة إعادة السعودية، شكرا جزيلا. شكرا للمتحدثين. السادة والسيدات، في ختام اليوم الأول من جدول أعمال ندوة التأمين السعودية السادسة، نتوجه بالشكر الجزيل لمعالي وزير المالية ومعالي محافظ البنك المركزي ولكافة المشاركين والرعاة، ولكم أيضا على حضوركم.